We should be good to go. We're good to go. In 10.
Welcome back, everyone, to another episode. Hope everybody's doing well. This is April 19th. Starting off the show really serious today. We're going to talk markets, and then we're going to get into it. I think the last show I started off with the wrong date, so I thought I'd be really professional today. What do you guys think of that?
We'd appreciate that.
Okay.
We're all the way pro here at Buy or Sell. What the hell?
I'd say the date's a minimum, right? Professionalism.
Yeah, no, it's time is important, dates are important.
Hitting us with the life lessons.
Since we do a lot of cyclical analysis, the dates and time is pretty important,
A little bit.
We do use the traditional calendar, and I follow Eastern time and that type of stuff. So,
should we say like the 19th day of April, year of our Lord, 2018?
I'm gonna start saying that just constantly, like the 4-hour chart, the 4-hour year of our Lord chart is turning back up. Oh man, that's funny. That's just came out of nowhere for our listeners. We really don't even talk before this show, so anyway, we're just keeping it real. So I would say the biggest thing in markets today is I just saw the pound absolutely get crushed. Deutsche Bank, I think, had some supposed fat finger. For those of you that aren't maybe familiar with trading terms, fat finger is a term for somebody at a bank or a trading desk hits the wrong button and buys or sells a stupid amount of assets or securities they don't mean to. Well, I don't know if you guys saw it, but I did see some articles. Deutsche sent billions of dollars on accident out. I think it was a year or so ago out the door to somebody accidentally, and then I guess they did it again today. That's not a big deal. I've just been paying attention to Deutsche a lot more lately because I think we're starting to see growth slow. So I know this is mostly about crypto, but we got to pay attention to the overall markets because at some point, as the institutions come in, it's going to matter. And if we see stocks roll over, you see bonds making new highs as far as rates go today. You got stocks down and bonds down. The capital is going to want to go somewhere that's performing. So I think that flows into the crypto markets. And we've talked before about what we think about the sovereign debt crisis on the horizon and what that means for private assets and crypto. But so anyway, I mean, big moves in the pound today. We'll see. I'm just keeping an eye on rates. If rates really start to rise, it's going to put pressure on these governments and their deficits. So that's kind of what I'm been keeping an eye on, as well as like Deutsche. And some of these cracks start to show in the financial system again. If we start to see U.S. growth slow, growth in Europe's already been slowing. China growth has been slowing. All those stock markets have underperformed year to date, and so I was pretty bullish stocks last year. Very cautious, if not starting to become bearish, U.S. stock market this year. And we're going to be trading that around in our trading room. Obviously, there's lots of different ways to play that. But as far as crypto goes and Bitcoin, we're up at 82.60 today. I'm looking at an hourly chart right now. And we're still very constructive and bullish. Got really bullish last week when we had that short squeeze on was it the 12th, guys? 12th, yeah.
Mm-hmm.
So we've been kind of looking for a bottom around 6,000 longer term. The market held exactly where it needed to keep everything long-term trend bullish, making those higher lows right around 6,000, held what we call the bands in our model. And now we turn the intermediate term back up, which has been bearish for weeks and weeks. So that's still all intact. It looks good. We've been buying dips, so I'm pretty happy with some of our plays lately. I mean, Cardano is a big winner. It was up almost 100% since our low buys the last couple of weeks. Same thing on Salt. We had some really good ads the last couple of weeks, and we're getting paid for it. Getting rewarded for it today. The last couple of days.
What I noticed about the way you trade, JJ, and the way that you're training your pupils to join you is a lot of patience. And that's just something I wanted to speak to, because I noticed, like, even when I guess the people that are new to the crypto team come in and they're doing things that are like outside of what you'd recommend, you still approach them with a very sense of calm. Like, I don't know who you were mentioning about earlier, and probably shouldn't mention them anyways, but they've done something probably outside of what your model would recommend to do, and you still help them through it, and we're really calm about it. And that kind of patience in a market like crypto is rewarded. So
well, I appreciate that, buddy. I think that, as just years as a trader, it just comes with experience. It's just learning to be patient. I was thinking about that actually on the putting green. I went and practiced my putting over at the club here this afternoon. This is such a nice day in South Florida, and I was thinking about there's so many similarities to golf and trading, because you're basically, you're not competing against other traders in the real sense. I mean, if you're standing in the pit back in the day and you're trying to get filled, and you're trading against maybe bigger players, if you're a really big trader, you kind of are trading against other guys or gals, but the markets are so big that you're really trading against yourself. So you're your worst enemy. It's the same thing in golf. But I was thinking about my lag. I've been working on my putting lag. And so I'm trying to measure in my backswing, like how far I want to take the club back. And then there's a certain tempo when I want to hit uphill or downhill. And it's kind of the same in markets. When you're starting to work a position against the trend, you have to have a different tempo. Like, kind of like if you're putting downhill, I guess you got to be your follow through. You don't need to hit it as hard, right? So your tempo is slower. Same thing when you're trading contrarian. If you're going against the cycle, or you're trying to kind of catch the turn, like we're doing on Cardano and Salt down here at these, we were buying Cardano at 15, 16 cents. It's up at 26 cents, 27 cents now. Salt, same thing. We're trying to get more aggressive around $2. It's up at 340 today. It's 70%. But to your point there, D, it's just sometimes when you're trading a higher time frame or a longer time frame, you have to be slower with your amount of entries. You have to be more patient on just let the market come to you. So you can be patient on your size. You can be patient on the amount of time between entries. So I always work with my traders, like, trade smaller size over what I call a wider range of the chart. That means, you give yourself more space on the chart. It's easier to work a position. And then, there's a time to get aggressive, and then there's a time to, you really got to be patient. And we've kind of been in a patient mode for months now. And now last week was finally it felt like we could pick the tempo up and start to get a little bit more aggressive. Our trading alerts, the amount of alerts we issue has gone up. We lost a lot of subscribers, I think, last month, just because if there's nothing going on, I'm not signaling to buy, it's just, it just is what it is. So I think people get antsy. They want to look for trades, but you can't really force the markets. You can't. Trading is one of those things that's different than pretty much any other profession. Like, if you want to make more money, you can get more busy. You can work harder and you can put more hours in. Well, trading doesn't really work that. I can't make the market move. I can't speed up time. Sometimes it just takes time to build a base or work off a move. It's just, that gets into a lot of this psychology of trading.
Yeah, it's interesting you say that too, because I think the people that are in that first mind frame you just mentioned, to get busy, make money, they end up going chasing just wild charts down in the depths, looking at things like, Christ coin, and trying to trade that off of Ether. And it's like, man, there's like 5 people in that market. What do you do?
I think
what are you doing?
I think you see a lot of people too. What they'll do is, their favorite indicator. It's not signaling a buy. Well, let me switch the indicator. Oh man, this 4 indicators later. Oh, this one's signaling a buy. That means I got to buy. Just find an indicator to match their
right.
whatever they want to do.
That
Right.
probably happens a lot. Well,
And anyway, that's a good point, though, Dimitri. That's a good topic. I mean, we could spend all hour talking about that.
we probably could. We probably should at one of these shows. I mean, well, we're gonna change the subject here. I want to try to do something, guys. I'm gonna try to do some public math.
Okay.
And not embarrass myself. As a previous math teacher, if I do this wrong, I'm just going to disappear.
Dimitri has a degree in math, so everyone knows.
Yeah.
He doesn't like to toot his own horn, but I will.
It's right next to me. So everybody's making these price predictions, and I'm not a fancy public personality. Like, I'm not Trace Mayer or Bobby Lee or Draper. I'm not going to get that much credit for making a price prediction, but their price predictions are outlandish, and they're so round, and they talk around their assumptions on how they go to it. Except for Bobby Lee. Bobby Lee's pretty logical in his breakdown. So I'm going to do some napkin math, and I'm going to try to produce a Bitcoin prediction that is reasonable.
Okay.
So let's go through this. So Bitcoin at its height last year was 850 trillion, somewhere in there. Sorry, $850 billion market, crypto, all of crypto. So I still think that's child's play, because the .com market at its height was like a $6 trillion market. That's trillion with a T. 12 zeros.
Is it 12?
So it's 12. Billion's 9.
Oh.
So that's 12 zeros. So I, being as biased as I am about crypto, think that the crypto market is going to be a little bit bigger than 6 trillion. It just has more potential to be bigger.
Mm-hmm.
I mean, it's the internet of money. When you think about that, it kind of softly implies that there's going to be a lot of money poured into it. So my base assumption is that the crypto market will go to $9 trillion. So I'm going to go ahead and plug that in my little calculadora here. Calculadora is calculator in Spanish.
Oh, man, I was so bad at Spanish. It took 3 years of it, and I had no idea I had never heard that. I didn't know that.
So we got a $9 trillion market. Now, let's also talk about the Bitcoin dominance, because we know Bitcoin dominates. If you don't think Bitcoin dominates, then you are what I like to call probably an Ethereum maximalist.
That's fair to say. Now, Dimitri, I got to stop you right there. I have a question for you.
Yeah.
What is the highest, quote unquote, Bitcoin dominance been percentage wise? Do you know?
100% at the origin, right?
Yeah, 100% at the origin. But nice, Alec. That's got the Jeopardy question. Got it.
Just doing my part.
I do believe when Ethereum dropped in 2016, I think it was, Bitcoin dominance was 97.8%.
In what year, sir? 2016?
2016.
Okay.
So that was before Ethereum kind of proved to the world, like, hey, there's other coins that are good and do things. Mm-hmm. There were other Bitcoin offshoots. There was Namecoin. There was OneCoin. There were lots of things, but everybody was like, come on now, Bitcoin.
Mm-hmm.
So the Bitcoin dominance, I think the highest it's been in the last 18 months is like 45%. So if we take 9 trillion and we take 45% of that and say that's Bitcoin dominance, we get hit with 4.05 trillion. So 4,050,000,000,000,000. That's just Bitcoin. Now, let's divide that by 21 million. So we get dollars per Bitcoin. And there's only ever going to be 21 million. It's going to happen right around the year 2025 when we're going to rapidly approach that 21 million. So let's divide that by 21 million. That's 6 zeros for you in the audience listening. And we get, here's Demetric Ferguson, the Bitcoin nobody price prediction for the year 2025. It's a lot of man. Okay, $192,857 per Bitcoin.
You're going out to 2025?
I'm going out to 2025 because at 2025, that's the maximum number of Bitcoin in the market. And I think that is also going to be right around the year we're seeing just all of these technologies come together to where Wall Street and other big entities are pouring money into this space. 2025, you heard it here. It seems like it's far away, but it's really not. 2020 is going to be around the corner. We're going to have a Bitcoin near $200,000 per Bitcoin.
Well, I like it. I think it's going to happen way faster than that, though, buddy, is my thoughts.
What do you think?
I just think, I mean, I think along those same lines. I mean, you know, if you look at other comparable markets, so, you know, the what they call the M2 money supply, which is, you know, people can look that up. That's assets that are pretty highly liquid, but not just cash. And that's probably around 13, maybe 14 trillion. So, but that's still that's just you know, paper dollars circulating around, and Bitcoin's, you know, this is a trend for obviously the globe, right? So I even think that when you look at the gold market at 9 trillion, maybe 8 trillion, it has limited supply, but nobody's ever paid, you know, no millennial has paid their Starbucks with gold, you know. They're not, it's, gold is just going to continue to be what it is, but it doesn't have nearly the, I mean, we're talking about the internet of money, which is going to be so much bigger than the gold market. But even if we just start with a simple, you know, baby steps, Bitcoin's got to grow as an asset class to the same size as the metals market, or just pick gold to keep it simple. Well, that's in line with your 9 trillion. But I think it should be much bigger asset class than gold. So even if we got the entire crypto market cap, which is at about 355 billion, right, guys? Somewhere around there, 355.
Yeah, 355 today.
So it's a triple to get to $1 trillion. Okay, so you can triple all the coins where they're at today. Just triple them. If everything were to stay the same, right? All these prices should be triple just to get to $1 trillion market cap. Well, we just talked about $9-10 trillion to catch up with gold. So you have a triple from here, and then you have 10x from the triple, right? So the total market cap, it's a triple to $1 trillion, and then to get all the cryptocurrencies to the same market cap as gold, it's 10x from there. So you're right, the Bitcoin continues to be dominant, but if they all kind of share the top 5 or the top 10, that's kind of how I look at it. So like Ethereum, if it's trading at 555 today, well, triple that, you know, it's at 1500. That's kind of where the highs were, right? 1400, I think, was the high. And then I think it's not going to take 10 years for crypto to catch up to the metals market. I mean, this is the internet of money. It's going to happen fast. I think 2 to 3 years, we could be contesting, you know, the metals market cap. So you could go 10x from 1500 on Ethereum is what? 15,000?
That'll be the day.
If you triple Bitcoin from here, what is that? 24,000, go 10x from there. That's in line with, that's pretty much in line with yours. Yeah, 240. That's always been my first longer term, if you like to use a target. I mean, we obviously are into timing, and you got to trade around and manage your risk on the way to, you know, $250,000 or 200,000. But I think that's you know, you can make a case for, you know, you could make a really lofty case for Bitcoin, but it's not really that helpful until let's get to compete with the metals market, and then from there, you can start to say, well, shit. I mean, if 5 trillion a day is the FX market is turning over, if Bitcoin starts to take over some of the market share of the dollar or the euro, I mean, you can start talking 10 times from there. The Forex markets are, I'd have to go back and get some better specific numbers, but I mean, we're talking 10 times, 10 times the gold market, the Forex market, a lot of these currencies. So that's if people really want to think big on Bitcoin, it's like, whoa, you mean you can go 10x from your 250,000 target? Like, yeah.
Yeah. I mean, when you look at 2017 and just before, before all the institutional money is really in, like, of course, there's going to be people dipping their toes in, but I know you personally have talked about, guys, the institutional money's not here yet, the vast bulk of it. And yeah. I think 2017 kind of put crypto on their radar. So when you take a look at 2017, the market cap started at about 16 billion. And what did it get to, like 60 billion by the end of the year? Or was it close to $1 trillion? But when you take a look at these performers, Ripple gained 36,000% in a year. Wow. Stellar 14,000, Ethereum 9,000%. And I think all these guys, they're all just looking at 2017 and saying, well, why aren't we in here now? Before that, no one cared. I mean, the percentages were there, but they weren't 36,000% in a year.
Yeah.
So I can see it happening sooner than later, seeing that it's only been like 6 months now. I mean, that's not a lot of time to see those numbers and then have to react to them as an institution. It's not going to happen quicker than that. They were probably looking at it, but now they really see those percentages and they want to hop in, and it takes time.
So
it does.
For you in the audience that need a TIL, or those of you that are familiar with Reddit, it means today I learned you need a TIL to post to your social circles. If we go 3x to 1 trillion and then we go 10x, that's 30x total. And the word for 30x is triakontuple.
Wow.
Triakontuple.
No, that's not Spanish, is it, Dimitri?
That's Greek.
Okay. Triakontuple.
We're going to triakontuple from here.
Well, Bitcoin has probably been the greatest bull market of all time. And that's what's supposed to happen to humanity and civilization, is the more people, the more money, the bigger the world gets. Each bull market's going to be bigger than the last big bull market. That's just numbers. But I think, I mean, we're still so early in this game. And if this is an entirely new monetary system that comes out of this, collapse in socialism, that's going to, the system is broken. No doubt about it. The solution from the politicians is raise taxes, hunt down the money, because then if we can track everything, and then if we could track everything, we can tax everything, and they don't realize that, you could confiscate all the wealth and you still wouldn't balance the budgets from all these governments that are out of control. So nobody's looking at doing a debt swap. None of these politicians are being proactive like usual. They only make decisions after the crisis. So most likely, history repeats. We're going to have a nasty sovereign debt crisis. Bond markets are going to get crushed. You're going to see defaults. And when that happens, I think that's going to benefit crypto even more. And like you said, Alec, once these institutions, they all want to play in this asset class, I think you're going to see one of the greatest bull markets. I mean, we're going to be sitting right for this whole wave. It's going to be exciting. I mean, there's not been a lot of booming industries, maybe outside of fracking industry or the things that have gone on in the tech world the last 20 years. But I think this is one that it's pretty obvious to see coming.
It stands a solid chance, man. It stands a real solid chance.
Yeah, for sure.
So
And
go ahead.
There's great progress being made too. Like I was gonna just tie it into the news. I think it was yesterday. BAT announced a major partnership when it was an actual partnership, not just a paid promotion like other coins.
BAT plus Dow Jones. You guys know what Dow Jones means. If you don't know what Dow Jones means, go pick up a Wall Street Journal and welcome to adulthood.
Let me Google it real quick.
But Dow Jones, I'm sorry, I don't want to insult anybody. Dow Jones is a big deal.
It's kind of interesting that, BAT's on the forefront of this, obviously building out this technology. It's interesting that Dow got to be the ones that's, did a partnership with them there. So they've been around for so long.
They see where it's heading.
Mm-hmm.
They see where the money's to be made.
Yep. So for those of you that are unacquainted with BAT, Basic Attention Token, it's a project that's led by Brendan Eich. He invented Firefox. So there's that. And I'm pretty sure he invented JavaScript as well.
Yep.
And you guys in the audience know a little something about JavaScript. So long story short, he's trying to offer you a way to pay the website creators instead of the website creators having to force feed ads down your face to keep the lights on. I think it's a really unique problem to solve. And you get resources back from your computer because it's not loading random adware and malware in the background that all these web browsers are trying actively to fight off. So it's basically a win-win. And they partnered with Dow Jones yesterday. So that's a pretty big deal. I mean, that's a pretty big institutional name saying, you know what, we're going to start flirting with this crypto thing.
Mm-hmm.
So it is the Dow Jones Media Group. So just to be, precise about that. But essentially, it's one of the biggest partnerships the whole cryptocurrency space has seen in a while now. I mean, wouldn't you say that, Alec?
Yeah, I think we found out who the next Coinbase is going to be.
Uh-oh. Alec, you trying to dip in that rumor mill. You trying to get the mill going.
We talked about it a few weeks ago, didn't we?
That's right, we did. Did you guys see my tweet about them Coinbase putting Dcoin on GDAX?
No, I didn't.
Decoy? Do you mean the wine?
No, D as in me.
Oh.
It's going to be ERC21, exactly one better than the ERC20.
I'll have to read the white paper.
Oh, no, sir. We do black papers. My project. I'm kidding. This is getting off the rails.
Oh, man.
But anyways, a direct quote from this story, guys, is this coming from, I believe this is coming from Ike himself. We'd like to improve the efficiency of that system by cutting out the middle players and help publishers directly connect to their readers, right? So, as I stated before, this is for you guys that do microblog or macroblog. I didn't know there were sections of it now. But for those of you that have a website and you publish things out onto the internet, but you have to take ads to keep the doors open. Well, if you get an HTTPS certificate and you sign up with BAT, they take you through the implementation process, and then you can say like, hey, people that are reading my stuff, it's kind of like Patreon. Why don't you just pay me in BAT instead of me having to show you these ads?
Mm-hmm.
So that was a big story.
Yeah. I haven't. I never used the browser. I've been using my Android for a few months now, but
I use it. I use it a lot.
Use Brave?
It's good. Yeah, I use it a lot. It's good.
It's a great browser. I love the little thing that you can go. I love the option when you click and then it shows you all the resources that are being consumed by like ads and adware and all that. And it's like, dang, I'm literally spending money on electricity on people trying to infect my computer or sell me MeUndies.
I know, right? It is refreshing to be like, oh, I blocked it all. I blocked all y'all.
So another story that could affect the markets I don't know. We're not big on, as you've listened. If you've listened to all of our shows, you know that we never preach that this specific event affected the market, and we just went through the whole spiel at the top of the show. These things are cyclical, and you're patient. But market news is fun to talk about. And Square posted some gains, and then they did us a favor. They gave the whole crypto community an attaboy, and they said the gains that we posted were directly related to us allowing people to trade Bitcoin on our platform. So that's a nice attaboy.
Yeah, I read into that article, and yeah, it's a smart move by them. It's just a no-brainer, really.
Yeah, and that just advertises it to promote it for other adoption cases too.
Yep.
Why aren't we getting those percentages?
Right. Exactly. Now, did those guys? I guess did they get set up as a money services or what's the word I'm trying to use? Money transmitter
transmitting service?
Yeah.
Did
they get? They must have.
I can't answer that definitely, but I do know it would make total sense because I go to like coffee shops and they have their Square readers. I don't know. Maybe they're just a service that transacts. So I don't know. It's interesting to look into. So you guys in the audience, if you got peaked about the Square story, look into see if they're a money transmitting service. That's something that I wouldn't know off the top of my head. So, But I had an interesting question. Like this new wave of adoption that hit last year, it seems like it's very centered around trading. Like I see so many people on Twitter is like crypto Bill, crypto cat, crypto dog, crypto squirrel, crypto Jesse. Like just everybody's trading. Everybody's putting charts up and they're trading. And so what does that imply about the crypto market? Like is a market full of traders, is it good or is it bad? I don't know. What do you think?
I think it's to be expected because it's not just a technology, it's a technology that has an inherent value attached to it that you can trade. So naturally you would expect more traders to enter this space than other sort of tech fields or advancements of tech.
Yeah, I think it's great. I mean, I'm a free market guy, so more markets the better, more market participants the better, more price discovery the better, more risk. Allow people to take risks.
Yeah, I mean, a lot of people come into the space because they see those percentages, they see the gains, and then they stay once they start learning. Maybe the tech doesn't interest them right away, but they see those percentages, they own a little bit of Bitcoin, they get excited, they start doing their own research, and they're hooked.
I mean, I remember when the internet was just starting to come out. I remember the Netscape days and the AOL days. I mean, I by no means understood the technology and stuff behind it. There's obviously so many people in this field were kind of around for that and help build that and understand the technology of that in those days. But I mean, I understood that, Netscape, this is big, AOL, this is big, but you couldn't trade it. I mean, how you didn't know how to get involved at the time. Well, now, I was pretty young then. It would have been nice to have the opportunity to be long the internet then. Now, we do a show, we did a couple of webinars with a lot of college students, and man, those guys have a lot of opportunity. You can get involved in the game for very little. It's exciting that you can trade this technology. And
yeah, and I think once people have some sort of like money on the line, some sort of value on the line, I think it really encourages them to do their research. So once you have a little bit of money in the game, you really want to know what's going on or what the developments are, and it just leads to more, I don't know, interest in the actual technology.
Yeah, for sure. For sure.
I think it also has to do a little bit with how we're pushing this brand of crypto. Because imagine if you turn a clock back to 1979 and your nerdiest friend that you have in your circle comes up to you and he says, "Man, you got to put money in the SMTP protocol." And you're like, "What? What are you talking about?" And he's like, "Oh, it's this thing that allows you to send electronic messages from computer to computer." And you're like, "I would never need that. My computer is collecting dust. I only use it to file
Yeah.
my tax or help me with my taxes. It's basically a giant calculator. Please go away. And
Yeah.
then you fast forward the clock to 1988, 89 or something. No, even further than that, like into 1990. And somebody's like, oh, here's email. It's electronic mail. It makes perfect sense. You don't go to your mailbox. You go to your online mailbox. Like, they don't need to say SMTP Protocol to send email. They just renamed it. Let's call it email. So I don't know. I think Bitcoin's a cool name, but maybe it has something to do with that.
I don't know. All these different projects, the value when you add like these new social media platforms, for instance, when you monetize everything, it kind of gives people more control of their data, of pretty much everything.
Yep.
It's a higher level of control.
So this is a question I want to pose to both of you guys. You guys are way more heavily active in the markets than I could ever dream to be. And I keep hearing this phrase a lot over the past few years, and that is a market maker. And I just kind of wanted to know, like, what incentives make a person want to make a market? Like, what do they have to gain from being the huge buy side on this stuff? Besides, obviously, the gains down the road, long term.
Oh, it's a good question. Yeah, so a market maker, somebody that makes markets, but what that looks like is you're providing a bid or an offer, right, in that particular market. And typically it's, market makers are been designated the role that, like if you're looking at a stock exchange or the specialist that used to be the guy that stands down on the floor, and his job is to take orders and the order, to I guess, organize the order book. But then also to provide liquidity is what a market maker does. So, I'll just give you an example. I'm talking to one of my friends in the Forex business, and they've been getting for the crypto business. They have customers that they on their Forex and futures business that are obviously wanting to trade and get into digital assets. So he was amazed that this week the amount of people, huge whales. I don't know if I imagine they're miners or just guys that have had, Bitcoin positions since the beginning. But there's guys looking to sell 43,000 BTC this week, and they're trying to do it off of the exchange. Like, they don't want to, there's not enough liquidity on some of these exchanges without moving the whole market. So that's an example of a market maker. If I have a bunch of relationships and I know there's a bunch of people that want to buy, or a few guys that are big players that want to buy, I know there's a couple parties that maybe want to sell. Well, for timing reasons, or maybe they don't want to talk to each other, or they don't want to let each other know who has what position. But if I can make a bid, and maybe let's say Bitcoin's trading around 8,000, if I can come in and make a market that's different than just using the electronic exchanges, well, that's a good example. If somebody doesn't want to use an exchange or 5 exchanges, well, somebody could step in and make a market saying, hey, if you want to sell at 89, 79, 90, if you'd be willing to sell a little bit below where it's trading right now, I think I can buy those from you. And then the market maker has a pretty good confidence that he could sell at 8,000 somewhere else. And so that's a little bit of kind of what a market maker does.
Okay.
And that
helps me understand it.
And and the people do it is because, they're taking that risk and they're compensated for it, right? They're taking that order on in hopes they can find, a counter order. So they take a little change for their risk.
Yeah. So I'll give you an example. Like in the bond market, a lot of bond trading occurs this way because there's no really exchanges that bonds trade on. You could get into the reasons why that is. I think fixed income community, there's a lot of money to be made when things aren't decimalized, and you can, what they call in the trading community, you can drive a truck through the spread. So, if I have a seller of a particular bond and I don't exactly know where the market is, somebody might be able to, buy those bonds 3 points cheaper, sell them to somebody else 3 points higher, and just make stupid amount of money. I mean, when you start dealing in hundreds of millions, and you can buy a bond a point cheaper and then turn around and pick up the other phone and somebody else is a buyer, and it's like you make a quick point, bam bam. I mean, that's how you make. I've sat next to traders. They make 300 grand on one trade just crossing 2 bonds.
That's a lot of zeros. That's 5.
Yeah. So
I'm counting zeros today. That's my thing.
You can go the wrong way though too, and really get yourself in trouble. Like if you could take down a whole firm if you bought a bunch of bonds and you didn't have the seller, or the seller walks away. We actually discussed a little bit of that with our blockchain developer this week. Is there some ideas there that we could do it on the blockchain where people want to broker crypto, if there's a better way to do it? And I don't know, there's some ideas there, because I don't know, it just gets complicated when you start to you have to take custodian, and we start dealing in dollars and FX again. It's like you got to trust somebody that they're going to send you BTC. You're going to have like an escrow. That's kind of where that third party starts to come into play.
So if I laymaned it down, to me it seems like it's a person that says, I'm going to be the person that has a bunch of this stuff. I'm going to go out and buy a bunch of it. And when it comes a time, if there's other people that are like, man, I need to get my hands on some of that stuff, you're the market maker, and they know where to look. They're basically like, oh yeah, that guy's the one that bought all the stuff. I'm going to go to him and ask him for some of the stuff that I want. Okay, that's simple. Oh, I just was thinking, because there's other markets that exist, like art, where the market has to be terrible, because it's like there's one person on the planet that owns that one piece of art, and it's like, how do I get to that guy if I really want that piece of art?
That's a great way to put it. Yeah.
Okay.
Yeah, the market makers, they're bidding, and then they're at the same time they're offering. So they're trying to bid below the market and then quickly sell above the market. And they hope that people sell on their bid side, and then somebody will come, what they call lift the offer, buy their offer, take the offer.
So, do we want to go into any other talking points, or should we go into qualifying the audience for?
Yeah, I think that was a lot of info. We don't want to.
Yeah, you guys have probably made it to the office, and you can only stay in your car and listen to us for so much longer before it starts to get suspect. So, let's give you some information. So, this Saturday we're going to be having a live trading session, 10 a.m. Eastern. JJ is going to be trading live. This is where you get the opportunity to watch him trade and ask all the questions about trading. If you've ever been interested in trading, which, by the way, like, there's people that make money in trading in crypto. That's a fact you can't deny. So if you want to know more about it, tune into this live trading session. Ask the questions. He's going to draw lines on the chart. You're not going to know what they mean. Ask the question. He's going to put indicators on his chart and set them up. You're not going to know what that means. Ask the question. Right? That's what this is for. Yep. So the link I'm going to post in the show notes to this show on how to get to that live trading session. We are going to need some information from you guys, because we're going to link that information to who you are, so you can get a discount if you do join any of the services that we offer. First name, last name, email address. That's simple. So that link is going to be in the show notes. And JJ, what kind of discount you think about giving them?
10%. Let's do it. Make it nice and juicy.
We're going to lob 10% off the top of all the services. So you're going to see a link to the services. You're going to see a link to the live trading webinar. And that's all going to be in the show notes. I'm also going to post it in the Slack. So if you're not in the Slack, you can join the Slack. I'll put the link to that Slack too, and the channel where I'm posting all this information. I'll post it one time on the general chat for everyone and multiple times in our price talk chat for everyone. So, yeah. Anything you guys want to add to that?
No, you did a good job. It'll be fun, guys. Join us Saturday morning. That's the nice thing about crypto is we do get some pretty good moves over the weekend. So while all the other markets are closed, we at least, for those of us that are addicted to markets, we can maybe even trade a little bit. We'll see what the energy's like, and then it doesn't matter if you're brand new to crypto. You can come in there. We'll ask questions, or if you're a veteran pro, and you want to talk whatever about markets, we can do it. It'll be a good time.
Mm-hmm.
Absolutely.
Also follow the distributed post on Twitter. You always stay up to date with Jason's analysis and development news, pretty much anything, legal developments.
Mm-hmm.
Got it on there.
And if you want to contribute to the distributed post, Twitter, DM me. Come join the general chat and DM me there. There's lots of ways to find me if you want to find me. I don't hide on the internet. Let's see. Yeah, so one last time. After you're done cleaning up the Lucky Charms that your daughter inevitably spilt on the kitchen table, join our live trading room session and learn how to trade a little bit.
Yep.
So,
be a good time. Well, that's all I have, guys. Another good session.
Yep. All right.
Hope all the listeners have a great weekend. We'll see you guys Saturday.
All right. Till next time.